We evaluated a tax preference that gives a 7-year property tax exemption for land that nonprofit developers own and hold for developing low-income housing. Unlike most property tax exemptions, it does not require annual renewal. In 2025, nonprofit developers will save an estimated $512,000.
The legislature wanted to encourage developers to build homes for low-income households. From 2017 through January 2025, developers sold 333 properties to qualifying low-income households. Collectively, they increased their spending on low-income housing from $11.7 million in 2016 to $47.7 million in 2022.
No new exemptions can be granted after December 2027. However, the legislature intends to continue the preference if developers increase their share of revenue spent on low-income housing. 10 of 22 developers included in the analysis increased the share of revenue spent on housing. One reason is that fluctuations in revenue may distort the trend. Let's compare two scenarios. In each, the developer spends more each year. In the first, the developer receives a large grant near the end of the time frame. The share of revenue spent on housing appears to decline. In the second scenario, the grant comes early in the time frame and the share of revenue appears to increase. Other performance metrics, like the number of homes sold, may better reflect legislative intent of building more low-income housing.
The preference provides tax relief and helps developers build low-income housing, but it doesn't meet the metrics set by the legislature. Also, according to the Department of Revenue, they have not consistently received documentation from assessors and beneficiaries. This makes it difficult to evaluate the preference. The Legislative Auditor recommends that the legislature determine whether to continue the preference. If it does, it should consider changes like a different performance metric and annual renewals. You can find our full report online. Thanks for watching.